Hi all, welcome to Funded 360 English. Today we are going to discuss about arbitrage trading. Some of the times you may have noticed that in NSE as well as in BSE, for the same stock, the price may be something different. Difference in the means that may not have a lot of difference, maybe in the order of 0.01 percentage or maybe to say 3 to 5 rupees difference. So here only the technique called arbitrage trading strategy comes into play. So arbitrage trading strategy is nothing but buy from an exchange where that has lesser price and sell that particular stock in some other exchange that has higher price. This is as simple as that. So the element of risk is theoretically zero. Now the question is why this is not doing by everyone? Because the return on investment is very less, or to say that's negligible when comes to rest of the trading strategies. So let's try to understand this is in a better way. Arbitrage is a trading strategy, basically involves the simultaneous buying and selling of assets. That's in general. In the case of stock exchange, that's stocks or commodities or anything in different exchanges to earn profits from the price differences. Okay, so traders are interested in this kind of risk-free trading strategy that basically exploits the inefficiencies in the market to book short-term profits. Why it's called as inefficiencies? Because theoretically what we are expecting is the price of a certain stock. For example, in the case of Reliance Industries, if that price is 2,500 in National Stock Exchange NSE, at the same time itself, without any lag, the BSE price also should be 2,500. But on the other hand, if the price at NSE for RIL is 2,500 and price at BSE is 2,501, means there's a lag occurs, or the liquidity pressure is something building up. So that's why we are calling that as the system's inefficiency. So by utilizing this inefficiency, only arbitrage trading runs. On the same time, you have to keep it in mind that these kind of differences are very much short-lived, maybe in the order of seconds or maybe in minutes, not more than that. So we generally need some sort of sophisticated software programs to identify the arbitrage opportunity and execute it. Generally speaking, two conditions, that's essential conditions for arbitrage trading. First one is the asset price mismatch. That means the particular stock must have different pricing in both these exchanges. Then only arbitrage trading will take place. If in the both exchanges, if the stock is trading at the same rate, then there is no point of selling in one exchange and buying in another exchange. The second necessary condition is the transaction should take place simultaneously or without much time lag, because before the price catch up with the lower price, the sell order should be able to execute after the buy order or the reverse. When it comes to Indian scenario, there are certain limitations on executing the arbitrage trading. The first thing is about the limitations on short selling, or in other words, you can say in India, we are not permitting you to buy from one exchange and sell into another exchange. For example, if you buy Reliance Industries from NSE and the same day within 2 or 3 minutes, if you try to sell that in BSE, that is not permitted. In that case, the transaction in BSE, that means the sell transaction in BSE will be considered as a short sell and you will be penalized for short delivery penalty, provided if you don't have that stock in your portfolio. So how we can do arbitrage trading in India? For that, we have to first purchase the stock a couple of days back. Then you have to seek for arbitrage opportunity. For example, if today you buy Reliance Industries 100 quantity and day after tomorrow you look for arbitrage opportunity and you find that NSE price is something like 10 rupee higher than BSE price for Reliance Industries. In that case, you sell Reliance Industries at NSE and buy at BSE. In that case, everything will be okay. One more thing you have to keep it in mind about arbitrage is, as I told you earlier, the return on investment is very less. So you have to take care about your brokerage and other allied charges associated with that particular transaction. Then only you have to decide whether the arbitrage trading is profitable or not. Now the question is where you can find the arbitrage opportunities. At the end of the day, majority of these business websites, they used to update the arbitrage opportunity. In the case of moneycontrol.com, you can find that based on the closing price, that's in NSE and BSE, they update the data considering the price difference, either that's 20 rupee higher or 2%, which are in both the cases that will be updated in the website as shown here. So that can be taken as a guide for you to take up the arbitrage opportunity. In short, if you have lump sum amount, you can go for arbitrage because that is a almost zero risk trading strategy. So basically this video is just for the awareness purpose. Kindly learn well, consult with your financial advisor before getting into any trade. That's all for now. See you in the next episode. Till then, bye from Manoj.